Hello, in this presentation we will create an invoice within QuickBooks Online. It will be an invoice related to inventory. We will be selling inventory a guitar within the invoice. Here we will have a comprehensive QuickBooks Online course soon, if not available yet. We also have a comprehensive Excel course which complements the QuickBooks courses and a QuickBooks Pro desktop version course you can find at the link below. We are in the QuickBooks Online dashboard. We will be continuing with the Get Great Guitars problem, entering an invoice for selling goods, selling inventory, in our case, selling a guitar. In order to do so, there's a couple of different ways we can get to the invoice. We could go to the drop down here where this plus item is. This has a lot of the quick functions and it's organized by customer, vendor, and employee. We would be dealing with customer and invoice. Once you start working with this a lot, this will probably be the most common way to go into the invoice. I'm going to go into the invoice, however, over here on the sales item tab. So sales, meaning we're going to make an invoice, which is would be reasonable to put in the sales grouping. And then up top, we're going to go into the invoices right here, selecting the invoices. And this is another way we can get to these invoices. And we will be creating a new invoice over here on the right-hand side, green button. Selecting the new invoice. We'll get a familiar type of invoice, and we're going to go through this form and just tab through it and enter the data. Note that as we go through these forms, we do want to think about what the journal entry will be. It's very easy to do these data inputs and not really understand what QuickBooks is doing. If we can understand what QuickBooks is doing, however, then we get a lot better idea of how to fix problems and what the financial statements are going to look like and how to read the financial statements and all that kind of stuff. So we note that if it's an invoice, that means that we're not receiving payment right now. Otherwise, we would use the form called a sales receipt. And therefore, the invoice really means that we're going to be increasing the accounts receivable. The account meaning making other people owe us, customers owe us within the accounts receivable account when that goes up. That's what an invoice will do for sure. The other side will be revenue. We're going to increase revenue. And that's going to be a sales item. In this case, sales revenue, because we're selling goods. If we're a service company, that's all there would be. If we sell goods and services, inventory, in our case guitars, then we're also going to have the decrease of inventory and the related cost of goods sold, all recorded by this simple form. When we put the data in, however, it's pretty easy to put the data in, and we don't need to know all that just to do the data input. If we want to know what's going on, however, we want to keep that in mind. So to put the data input, I'm going to put in the customer first. We select the drop down, we can find the customer. If we start typing in the customer name, which in our case is Anderson, we get the customer name, and I'm going to tab through. Now we're not going to have an email address, so I'm not going to put the email. If we're going to email the invoice, it's really helpful to do that. We can email directly from there, from this invoice, which is nice. Billing address. I am going to add a billing address because we are going to have sales tax. And the QuickBooks Online is going to need a billing address in order to calculate the sales tax. Now I'm going to use a California address because I'm more familiar with the sales tax there. So we set up the sales tax settings last time. If you want to, in a prior presentation, so you can go back and take a look in order to get that sales tax set up correctly. Once we have that, then I'm going to set up the address, and I'm just going to pick an address, which I believe is a pizza place here. And we'll have that, and that'll give us just the option. This is just a random address. And so that'll give us the calculation from the sales tax. We're going to say that the settings are going to be terms net 30. We then have the invoice date here. So the invoice date we are going to say is 01/12/21. So January 12th, 2021. That'll automatically give the due date then, which is February 11th, 2021. And I'm not gonna fill out the shipping information. I'm gonna keep that as is, and we're gonna just scroll down here then to the actual inventory items. I'm tabbing through everything to the product item. Now these are gonna be the inventory items we set up. So if we haven't set up the inventory items, you can go back and take a look at that. The setup process, we're gonna be selling goods in this case, meaning actual physical inventory. In our case, guitars. And we can select the drop down to see the guitars here and the other inventory items, and or we can start typing in our case it's a GTPR, that's the one right there. I'm going to click on that item, and it'll automatically populate based on that information that we put into the item list. So it'll give us the description. It's a Steinberger solid body. Quantity 1, rate is 410. It pulled that just from the items. Now note that that 410 is the sales price, the retail price. What is not being shown here is going to be the cost. However, QuickBooks is generating the cost. We'll talk a bit more about that as we go. We see that we do have the tax checked, so that should be correct, so meaning we're telling the system, hey, calculate the tax on this, and therefore it does, and we see this calculation. So we've got the 410 sales price. You can imagine that being, if we're in a store, that'd be like the sticker price on the guitar. That's what we actually sell it for. Sales tax, then, we have this 3178. Now that's going to be based on the calculation in terms of what state we're in and what the local sales tax settings are. Because this is kind of a generic problem, I want to make it so that it can be applicable to different states that have different sales tax. Note that once you know how to calculate sales tax, it's all the same. It's just going to be a tax rate times the sales. It's just the tax rate that will change. So I'm going to use a simple tax rate here. I'm going to just adjust this to a 5% across the board tax rate. So I'm going to just, for example purposes that could be more applicable just to the concept, 410 sales times 0.05, 5%, we're going to change that to $20.50. So we're going to say that this sales tax, we're going to say, is $20.50. And there we'll have that. It's going to say, do you want to keep that? Why did you do that? It doesn't line up to what we calculated. We're going to say, yeah, let's keep that. I'm going to tell it's an other, and it's an example problem, just to give them feedback to say they didn't mess up or anything. So you don't have to give them that feedback, but there you go. So there we have that. Now, and then we have the end here, the 410, the 20, and that'll give us the $430.50 is the total. So if we break all this down, what is actually happening here in terms of how is this going to affect the financial statements? We know that it's going to increase accounts receivable, meaning Anderson owes us money by the fact that it's an invoice. That invoice basically means accounts receivable is going to go up. It's going to go up by the full amount, the $430.50. We also know that sales is going to go up because it's an invoice, and sales is the other side that always goes up. And we can call it any kind of revenue account. In our case, we called it, I believe it's going to be in sales revenue. That's going to go up by the 410, however, not the 430. The difference between the two is the 2050 sales tax. That's going to be a liability account because we don't get to keep it. We have to pay it back into something like sales tax payable liability, not on the income statement, not affecting net income. Then we have two other accounts affected that aren't even on here in terms of dollar amount or account. One being inventories going down. We can see the inventory item here. However, the amount is the sales amount, not the cost. It's going to go down by the cost. We don't know what that is by this presentation. We'll see it when we look at the financial statements. We would see it if we looked at the items. And then the other side is going to be the cost of goods sold for this, which is an expense going up. So the income statement is going up by 410 and then down by the cost of goods sold, which we don't really know in terms of net income. So we'll take a look at that once we record this. Note, once we record it, we can save and send it if we had the email up here. Otherwise, we can save it. We can print it or review it if we want. Let's do that. We're going to say print and print or preview. And so here is our invoice. I'm going to go ahead and download that. And we're going to put that into this folder. So it looks like it's going where I would like it to go. So I'm just going to save that. We're going to say invoice Anderson, and I'm going to just put the date 01/12/21, something like that, and save that invoice, and there we have that. Okay, so now I'm going to go back and let's take a look at the financial statements and see what happened there. So this has been saved. We're going to X out of this. And then we'll go to the reports and see what this has done. So we'll go to the reports. And I want to take a look at all the reports. So let's take a look at the balance sheet, the main reports, the financial statements. We'll first take a look at that balance sheet. And we're going to change the dates from 01/01/21, the year that we are working in, 01/31/21. the first month of that year. And then we'll run that report and see what happens. So nothing happened to cash, of course. We didn't get cash. Something did happen, hopefully, to receivable, we would think. Let's click on receivable and see what we have in the detail. Within the detail, we see this accounts receivable. There's our invoice for 1004. If there's the 430, if we click on that, then we get back to our invoice here. There's the 430. That looks what's being affected. So we'll close this back out, see what else is going on. And we're going to scroll back up. We're going to go back to report summary. We'll scroll back down. So that was accounts receivable. The other side of the accounts receivable would be the sales side. So let's take a look at that second. That's going to be the accounts receivable went up. The other side's actually on the income statement. So let's go back to reports over here. We're going to go back to the reports. And QuickBooks calls that the profit and loss. So let's go look at the profit and loss report. So we'll type in profit and loss. And then we'll change the date range from 01/01/21 to 01/31/21 and run this report. We're going to get good at running these reports. And there we have it. And there's our sales item, the 410. If we click on that, that's our sales, the 410. If we click on that, there is our invoice. Note, however, that it didn't pick up the 430. It picked up the 410. So the difference, 2050, where's that going to be? Well, let's find it. We're going to close this out. That's going to be back on the balance sheet. So I'm going to go back to the reports over here. We're going to go to the balance sheet again. So balance sheet. We'll change the dates once again to 01/01/21 to 01/31/21. Run the report. And on the balance sheet, we then should have a liability, we would think, of sales tax payable. So here we have accounts payable. Here it is, California State Board of Equalization and other current liabilities. They didn't call it sales tax payable. They named the actual board we're going to sell to. Now, of course, this will differ based on the area we are at. So, and we might have multiple locations. So it's actually telling us a bit more detail than possibly we would expect, which would just be sales tax payable, that we owe sales tax. So that's good though, because it tells us exactly who we need to pay to right on the balance sheet. We're going to click on that. If we click on it, then we see our items here and our information and our invoice. So we're going to X back out of this or go back to the report. Now the other side of it is what we didn't really see on the invoice, and that's going to be the inventory going down. So that's going to be a balance sheet accounts. I'm scrolling all around the balance sheet. I'm looking for inventory. We're looking for inventory, so that's going to be up top under total accounts, other current assets, inventory. There's inventory. So we're going to click on that and see what happened to inventory. And we see that inventory is here. It went down by 328. I don't remember that number at all. And when I click on that number and go to this invoice, I don't see that number here at all. And it's not going to be here because it's on the items. When we created the items, that's when we set up the cost. So if I close this back out and we go to the sales and we go to the products services, we set up this ELP item here. And if we click on the edit, then we can scroll down and we see the sales price and the item for the ELP, which is not the inventory that we sold. So let's scroll back down. We're looking for the GT, this one. This one's the one we sold. So we're going to take a look at its information. And we'll see that we put it in their sales price 410 and the cost is 328. So the system knows the cost, but we're not going to put the cost on the invoice because we don't want to tell the customer what the cost is clearly. But the system will calculate it when we generate the invoice. Therefore, we'll see the invoice as the backup to the inventory going down, as well as the cost of goods sold. So let's see the last form. We're going to look at reports. We're going to go to the profit and loss again. Profit and loss, and we want to see from the dates 01/01/2/12/01/31/21 and run the report. And then we got the cost of goods sold. Here's the other side of that 328. If we click on that, we see this item once again. If we click on it, we have once again that invoice. Xing back out of that, going back to the profit and loss, we can see the effect on the income statement. Increase 410 from sales. Also an increase in the expense of cost of goods sold, 328. Net increase to net income then is only $82.